Welcome to this webinar. It's co-hosted by Swesif and Swedish Investors for Sustainable Development. My name is Charlotta Davidowski Sydstrand and I will be moderating the session today. I'm normally sustainability strategist at AP7, but I'm also a board member of Swesif. And for those of you who are not familiar with Swesif, it's a forum for those working in Sweden with investments for sustainable development. We bring together a range of actors in the financial community. As of today, we have 125 members, most of whom are asset owners, asset managers, but also other organizations working with sustainable investments. If you're interested in joining Swesif or one of our project groups, or just know more about our works, our seminars, and our projects, please visit our website. And as you can see, we have a full agenda for today with some really prominent speakers, and I really want to encourage all of you listening to take advantage of the fact that they are here and to take the opportunity to ask questions. We will have a Q&A session at the end of the webinar, but you do not have to wait until the end of the webinar to ask questions. Just write them down in the chat function as they pop up. And if there are any clarifying questions that needs to be asked before the end, I will raise them between speakers. If you want to write questions in Swedish, that's fine, and I will do my best to translate for our English-speaking speakers. I hope that you will leave this seminar with a better picture of why corporate climate lobbying matters for investors, what the developments are currently within the international investment community, and what's happening looking forward. And before I hand over to our first speaker, I would just like to mention a couple of words on how corporate climate lobbying has been a focus issue for AP7 over the past years, why we're even having this seminar. We started engaging in the issue in 2015 when it became apparent in the process leading up to Paris that business organizations were playing a major role for the outcome of climate policy. And a couple of years later, in 2017, we decided to dedicate 3 years to focus on the issue as a thematic project, to dig into the issue and explore how we as investors can contribute to responsible lobbying on climate issues and to eradicate the root cause of negative lobbying. So we closed this project from AP7 side last year, and we have published a report on our takeaways that you can find on our website. It's both in English and in Swedish. And over the next year, we will continue to work on the issue, particularly focusing on how to partner with companies in order to support positive lobbying. So before I hand over to our first speaker, I again want to encourage you to ask questions in the chat function. So without further ado, let me introduce Eva Axelsson, who is Chief Sustainability Strategist at Swedbank Robur. She will give us a brief background on Swedish Investors for Sustainable Development. Go ahead, Eva.
Thank you, Charlotta, and thank you everyone for listening in, and good morning. So no single investor can battle the climate crisis by themselves. We need collaboration, and sustainability is really not a competition. So with that, I'd like to introduce Swedish Investors for Sustainable Development and the working group on SDG 13. So next slide, please. So Swedish Investors for Sustainable Development is an active collaboration that kicked off in 2016. So we have 4 years now with a joint commitment and a partnership comprising 20 of the largest financial actors on the Swedish market, as well as SIDA that serves as a facilitator and a catalyzer. And we also, as you may notice, we are competitors working side by side with the largest challenges on our time, but in a close partnership. And again, sustainability is not a competition. We are focusing on these sustainable development goals and the solutions. And the way we go forward with this is to focus on some goals. And we have formed working groups on gender equality, clean water and sustainable cities, decent work, and for this seminar, the investors' role on the climate agenda, but also on anti-corruption work. And with that, and the working group on the SDG 13, we have had a focus on TCFD and other ways to sort of really push and communicate of what investors believe is the solution for the future. And we believe then the next step, and then also the next slide, please, would be to take the work on the climate lobbying more out to Swedish context. We have a tradition here in Sweden, and among the 20 members on the SISD, to have an active ownership to support, push the companies together in collaboration with the clear strategies. And all of the members of the SISD do have a climate strategy. It's central for investments today, central for future performance. So we believe with the international frameworks, we will have further meetings to support further reporting from companies. And we truly believe that a climate strategy for ourselves, but also for the companies we invest in, need to encompass the whole value chain. And we also believe Swedish companies have a potential to really be the positive influencers in this case, as in so many other issues. So with that, I'd like to stop here. The Swedish Investors for Sustainable Development and the working group on SDG 13 will come back with, I think, further reporting on the issue, and we're really just starting now to work in this working group together. Thank you.
Thank you, Eva. Now we will hear from Dylan Tanner, who is the Executive Director and founder of Influence Map. That's a groundbreaking research organization and think tank that provides investors and other stakeholders with analysis of how companies influence climate policy. So Dylan, please.
Thank you very much, Charlotte. Delighted to be here. I'm speaking to you from London. We're a UK-based non-profit think tank. Our mission is to help governments decisively act on climate change, and we use the power of data and analysis to do that. Our core program is related to climate lobbying. We launched it in 2015. We don't advocate, we don't judge ourselves. We use more powerful levers to do this on our behalf, or to do this on behalf of the climate issue. Our biggest partner stakeholder group is the investor group, not least the Swedish investors who displayed interest in our data when it first came out in 2015, not least AP7, and I think they've been a driving force in pushing this issue globally. So today I'm going to give you an overview of the issue, why it's important to investors, and some what we see as progress made so far. I want to start with to remind you of why climate policy is important, and it's been stated by the IPCC that binding and decisive government action to facilitate the energy transition, renewable energy, electrified transport is a central solution to climate change, with other factors being facilitators. So we need this climate policy. The scientists say we do. In the years since the Kyoto Protocol, if you can remember that back that far, we've seen a range of policy measures suggested by governments around the world that have been watered down, terminated by industrial lobbying. We've tracked some of these on this map here, including the EU ETS, the carbon tax in Japan, and various climate measures in the United States. So to understand how to solve the climate crisis, it's really important to understand why this blockage is happening and unpick it and systematically address it. And that's what our system attempts to do. I will give you another illustration of how important government regulation is in climate emissions. In the 4 years of the current U.S. administration, the deregulatory measures driven by industrial lobbying are estimated by the New York University of Law to will cause a 5% increase in U.S. emissions by 2025. That's a massive contribution to global emissions. So we tracked those deregulatory measures and the industry groups behind them, including the American Petroleum Institute, but more crucially, the U.S. Chamber of Commerce and the National Association of Manufacturers, whose members consist of all of U.S. corporate America, who's who of the big names in corporate America, who are funding these groups and largely standing by silently while they push for deregulation and watering down of climate policy. So we regard this corporate influence on climate policy as a core issue when you're assessing corporations and climate, and to be considered alongside scope 1, 2, and 3 emissions. We term it scope 4 emissions, but it's a very important aspect that needs to be measured, and that's what we attempt to do. I should say that the work we do does not result in a scientific metric of tons of CO2 or anything like that. It's a relative metric of how companies are influencing climate policy globally against a Paris-aligned benchmark. To give you an idea of what this lobbying consists of and why a sophisticated analysis is important, the tactics and messaging of some of the companies trying to delay climate policy has changed from being very overtly against climate, denying climate, to being a message of and a strategy of appearing to be very positive, supporting Paris, supporting now net zero by 2050, yet at the same time undermining a lot of the facilitating details and actions that need to happen now to make that possible. So requires a very integrated and nuanced system of measuring various corporate activities on lobbying. So this is what our system does. And our methodology is rather complex, so I urge you to go onto influencemap.org and look at it if you wish. But I will give you the bird's eye view of the results, the global results so far. And these logos represent companies' positions on climate policies. On the vertical, we have the intensity of their lobbying. So this is not whether it's negative or positive, it's just the intensity of the lobbying. And on the horizontal, we have on the left-hand side, whether that lobbying is against Paris-aligned benchmarks or whether it's supporting it. So let's look at the upper part of this, which is the strategic lobbying. That's where companies are dictated by the CEO to take positions on climate policy and push them through their trade associations and directly to governments. So on the upper left, we have a range of the fossil fuel value chain companies, the oil and gas companies, mining companies, and energy intensive companies, holding back meaningful Paris-aligned climate policy. Fortunately, as Charlotte alluded to, we do have a trend of positive climate lobbying within the corporate sector that we also track, and this is mostly driven by companies whose business models depend on accelerated and ambitious climate policy. Companies like Iberdrola and utility companies, increasingly companies like Tesla who require the policy for their business model, but also companies like Unilever and DSM, IKEA, and others, demand-side companies who not only want to source renewable energy, but also want to see the climate policy to create their vision of a sustainable future. So we do think it's equally important to encourage and recognize these companies as it is to counter the negative lobbying. This work we do, as well as featuring in the investor community's agenda, it also is very important to get this in the media to understand, so that they can understand it and tell the correct story of climate and companies, and to ensure that companies are not able to greenwash and pretend they're doing something while doing something else behind the scenes. We do work extensively with investors. Our data and content is very much suited towards use by investors. We produce metrics and company analysis, comparative companies analysis, sector analysis, and investor notes for engagements. So we work with the Climate Action 100 process, which I understand is the largest investor engagement program in history, and now counts BlackRock and State Street amongst its members. And I should mention BlackRock has prioritized lobbying in its latest stewardship guide published last week. As an indicator of positive climate lobbying, we do track, and we are in touch with a lot of these companies who are leaders in this, true leaders in climate advocacy. Unilever stands out as a company that, when the new CEO took office early last year, one of his first acts was to send an open letter to all of their industry groups globally, demanding that they lobby in line with the Paris Agreement. This is a trend that we should see across all companies in all major companies in the investor universe. The investor efforts on climate lobbying have been very promising. The issue is now firmly on the investor agenda. The companies know this. We've seen an initial group of disclosures from some of the high-emitting and fossil fuel companies auditing their trade associations, the positions they take, and any misalignments. So good progress so far. We should be aware that disclosure does not equal action. What we need is reform of these industry associations and the companies on their lobbying. As Influence Map, we are checking in great detail all of the disclosures that come out. We're also checking actual progress made in reform by some of the companies who the investor agenda tackled 3 years ago. So companies like BHP and Rio Tinto, who started the process, there's now enough data and justification to demand to see action from these companies. And so it's really good to see also shareholder resolutions remain on the table if escalation is needed. And we don't have an unlimited amount of time on this topic. So I think that it's great to see the investor agenda ramp up to be more detailed, to demand more action, and as well as just disclosure. And so I will end my presentation there and look forward to any questions. Thank you.
Thank you, Dylan. Please stay to the end to answer any questions. That was a really good introduction to the topic. And next we will hear from Clare Richards, who is Senior Engagement Manager at the Church of England's Pensions Board. She's leading the thematic work within Climate Action 100 in Europe on corporate climate lobbying. So she's the best person possible to give an introduction of what is happening in the investment community at the moment. Clare.
Thanks, Charlotte. Next slide, please. I'm just going to give a brief overview of kind of how investor expectations have evolved on this issue over the past few years, look at what some of the pushback has been from companies and continues to be, and which companies are disclosing, and then also do a little bit of a forward look to what's coming up in 2021. If you could just flick through or click through these. So, I mean, yeah, this is not a new issue. Hopefully, you know, the content that we're covering today, whilst maybe not so familiar, it is something that you have been increasingly aware of in recent times. As Dylan noted, AP7 have really been at the fore of this. Charlotte is being very kind in putting the spotlight on me. But AP7 and the Church of England Pensions Board 2 years ago really tried to catalyse investor attention on this issue in Europe by drawing together a set of investor expectations summarised there on the right-hand side, and happily, BNP Paribas Asset Management also joined that charge. And really, over the past 2 years, we've been, trying to put and keep this on the agenda of both investors and companies in Europe. If you could click again, thank you. And latterly, these issues have been integrated into the Transition Pathway Initiative. The Church of England Pensions Board is co-chair and co-founder of that initiative. There are 2 indicators in there which have been helping to shine more light on this. That's also been codified, if you could click, within the TPI or FTSE TPI Climate Transition Index, which was launched earlier on this year, which seeks to kind of, turn those data points actually into real life financial investable indexes or indices. And we were really, we've been working closely with allies globally on this, and we were really pleased last year when Ceres, the investor network in the US, took the European investor expectations and really ran with them in the US. And Ceres as well have published a set of investor or policy engagement expectations in their blueprints. Can supply the links to all of these documents if anyone's interested to drop me a line. And I think, the real turning point as we head into 2021 is the fact that corporate climate lobbying is now solidified as an investor issue within the CA100 benchmark. So the fact that all of those 161 or 167 companies as it is now, the companies that are assessed as part of that benchmark will be graded on 3 different indicators that really drill down into what their policy and actions are related to both their own lobbying, but also the alignment of their industry associations. If you could just click. And on to the next slide. So there's a lot of text on this slide. If you could just click on through. But click again. Thank you. So 4 areas: lobbying positively, having robust governance procedures, acting when unaligned, and being transparent. None of this is rocket science. It's basically about honest housekeeping and good governance when it comes to lobbying. Rory will talk more about this when he's talking about the Responsible Lobbying Project later. But really what we've found in engaging with companies is that there's actually a real weakness of governance in this area, and it's difficult sometimes to discern whether the lack of oversight of the activities of industry associations is down to a naivety or, a lack of attention to it, or whether it, conceals something that is, or there's a convenience to that naivety, that it's kind of, if they don't ask, then they don't have to take accountability for what their associations are doing with their supporters, members. And again, that speaks to what Dylan was saying about companies saying that they're doing one thing, and then, under the cloak of a lack of transparency, they're actually, through their lobbying engagements and advocacy and social media campaigns and others, are actually actively or tacitly seeking to delay and disrupt the type of policy, climate positive policy interventions that are required to actually get us towards the Paris goals. Next page, please. So, and you can click through 4 clicks here. Thank you. As you can imagine, there are many different responses from companies when these expectations are raised with them. A common refrain is, we already disclose, and unfortunately, the good work of Influence Map shows that what is disclosed directly by companies is only a tiny part of the picture. And what companies disclose, them, they often refer to their CDP reports, but actually when those are held up to the slightest bit of scrutiny, you can see from looking at their climate change reports to CDP that they're cherry picking what they're reporting on, and kind of willfully ignoring, or as I said, maybe through a naivety, not reporting on the associations that actually are having a negative influence on climate policy. Other areas of pushback are saying, that they don't agree with everything that their associations are doing, and that they're only one member within that group. And the investor expectations from 2018, they address that. They ask companies, okay, you might not agree with what's been said, but we need to understand what you're doing as a positive advocate, a positive member within that group, to actually make your displeasure, your disquiet at those anti-Paris kind of lobbying activities, how you're seeking to actually engage from within and influence the association to modify their position or to stop lobbying on climate issues where there isn't actually agreement within the broader membership. They're legitimate areas of concern for companies, especially when they say that they derive broader benefits from their memberships, that they don't want to leave associations, even if they actually recognise that they aren't lobbying on climate issues in the way that the company actually has committed publicly to a strategy. And I would say, and I do say to companies on that if you're deriving so many benefits from these associations, you would get even better value for your money, more bang for your buck, and the time of the people who are representing you in those associations, if those associations would actually concentrate on providing expertise and briefings on the areas that are actually within their core mandate, rather than straying into territory of climate issues that are already covered by other specialist organizations anyway. Like it just doesn't make sense for companies to be paying hundreds of thousands sometimes in membership fees to associations that are actually getting in the way of them being able to deliver on anything like a net zero target. Next slide, please. So happily, over the past few years, we have seen that those companies on the left, 14 companies in Europe now have published disclosures. As was noted earlier, a disclosure is a starting point. That they're far from perfect, and I know Influence Map will be publishing an assessment early in the new year of what those, of how they kind of grade or assess the disclosures that have been made so far. And it's the beginning of a process in terms of making sure that once there's transparency around those positions, that companies are actually, monitoring and taking action on areas of misalignment and are really kind of applying a robust approach to their review of those memberships and policies and actions. If you could click again. And unfortunately, as it stands at the moment, the vast bulk of those companies are still on the right-hand side. So where there's currently no or low disclosure, where they might say, well, we're part of the EU Transparency Register, or we report in our annual report, but actually it's a very piecemeal approach, and it doesn't cover all of the geographies in which they operate. Like it's a common refrain to say EU Transparency Register. The secret, or the secret is in the name there. That only covers EU lobbying. What are they doing in the other areas of the world where they operate? That's what we don't have sight of at the moment. There are signs of progress with several of the companies on that list, and that's through the good efforts of some of the members of Swesif as well, that imminently we're hoping for progress from some of the Swedish companies on that list for sure, and look forward to that in Q1. But this really has to be a partnership effort of investors raising this issue and really pushing it home with their portfolio companies, like why this is an important issue. And if you could click, please. I mentioned and click again, sorry, a few times to the end of this. As I said, climate policy engagement is at the heart of the net zero benchmark. Again, a call to action to you would be, when this is publicised in February, March time next year, look at how those companies are being graded on Section 7, and ask those companies in your portfolio, why, like what their plans are to actually step up on this issue and to be more transparent and to make sure that their policy and lobbying activities are actually aligned with this benchmark by the time they're next assessed for the next benchmark, because the time is ticking on. We need to make sure that this negative lobbying is nipped in the bud now. So if you could click again, please. And I don't expect you to read this micro wording on the slide. This is just an indication of where the kind of AGM escalation strategy of the IIGCC group is heading to in the coming AGM year. You don't need to read the wording of this draft resolution, because the wording is very much aligned with those 4 areas of expectations that we talked about earlier on, the expectations from 2018, where it's about policy, governance, alignment, action and reporting. That's what we're asking for in this. So again, it's not a new ask. It's just for companies that unfortunately haven't been quite heeding that call, that we need to kind of step this up and encourage them via shareholder resolution to actually commit to doing this for the 2021 reporting year. And we'll be finalising the list of companies shortly, and I would really encourage you, to cross-check those with your holdings, and if you can help to co-file or certainly help to support by voting in favour of those resolutions, then that is all a really important part of the effort of companies taking this issue on board and providing the level of disclosure that investors require. And if you could flick on. And my final slide is, it's a keystone issue, and I keep coming back to this point that we're not going to reach the targets and make good on the efforts that we're making in other areas of our CA100 engagements if we don't grasp this nettle, if we don't get companies to disclose and ensure alignment of their lobbying, whether it's directly in their own activities or those that they fund indirectly. Last year, we're at the end of 2020, aren't we? But earlier on this year, there was quite a watershed resolution that was filed at Chevron, which, as noted on the screen, achieved more than 50% vote, 53% vote. That was backed by BlackRock, and on the right hand side we've seen them codify in their voting guide for as we head into 2021 that they're also going to increasingly be seeking kind of confirmation via engagement or disclosure. And I hope the emphasis is on disclosure, because we need that transparency for it to be out in the public domain. But with the likes of BlackRock now on board, I think we're increasingly going to see those resolutions that are filed hit home. So look forward to working with you on this in the months ahead. Thank you.
Thank you, Claire. Just before we move on, if there are any investors who are listening to this and who are interested in taking you up on the encouragement to vote on these issues during the AGMs in 2021, or even maybe co-file on resolutions, or just have a dialogue with the companies in your portfolio who are not members of the IIGCC, would it be okay, Claire, to contact you directly on this, or how should you move about if you're a Swedish investor is not a member of IIGCC and want to act on the AGMs that you were mentioning?
Good point, Charlotta. Yeah, I mean, happy for people to contact me or to be signposted onto me by anyone involved in organising this webinar today. As I said, that the list is still in draft form, but will be finalised imminently. But in terms of engagement with companies, all of the European focus companies and all of indeed the US focused companies, they've all received direct engagement in written form about the investor expectations. So anything that you can do for any, in contact directly or as a group with any of the CA100 focus companies just to underline the fact that you're watching this issue and that you want them to act and disclose, that would be really positive too. But yes, please do get in contact.
Great. You can always contact me as well, because I'm going to be in touch with Claire for the foreseeable future. So our last speaker is Dr. Rory Sullivan, who I think many of you already know. He is CEO of Kronos Sustainability, and he will provide the more academic perspective on this issue and talk about the development of a framework that is underway on responsible climate lobbying. So Rory, please go ahead.
Thank you, Charlotta, and thank you, Claire and Dylan, for your comments. I am going to talk, my official presentation is about the project that AP7, BNP Paribas Asset Management and the Church of England Pensions Board are leading with Kronos Sustainability on developing a framework or a standard for responsible climate change lobbying. Next slide, please. But I should also note that Kronos is also managing the delivery of the data for the first iteration of the CA100 plus net zero company benchmark, which has included developing the indicators on lobbying that Claire referred to earlier. So I'm very happy to talk about those. And I think that that's quite a good introduction to this project, because I mean, lobbying is a mature issue for investors. I mean, I would say the first collective work done by investors in this area was done in 2011, 2012. Since then, we've had a series of investor expectations and statements, and more recently, we've seen a much more assertive approach to AGMs and filing resolutions led by Charlotta and by Claire in particular. However, so why have we decided to do this project now? Essentially, there are three different reasons. One is we need to coordinate. There are now multiple investor statements and multiple narratives around responsible climate change lobbying. It is time to bring those together, because I think otherwise we risk being confused. The second is that investor expectations have evolved from practice and not from theory. And we thought it was time to step back and say, actually, are we missing something? Are we missing something from the experiences in other sectors where we've also seen corporate lobbying, for example, on animal welfare standards, tobacco, pharmaceuticals regulation, etc. So we just want to step back and say, are we missing something major? And the third, which Dylan's comments sort of foreshadowed, is that the world in which we operate has changed, that we are no longer solely concerned about the one-on-one interaction between companies or their trade associations and policymakers. It's not just that formal submissions and formal meetings. It is about the way in which companies and trade associations are shaping the landscape within which public policy is developed. So we've seen narratives recently around, the clean gas transition. We've seen companies position themselves as going green. We have seen companies, as Dylan articulated, sort of expressing support for the goals of the Paris Agreement, but then essentially saying it's a little bit difficult when we get to the technical issues. So what we are seeing is that the landscape within which corporate lobbying is occurring and is being practiced is quite different. And I think the part of this project is to make sure that our expectations of companies are up to date and reflect that reality. Next slide, please. The project outputs are going to be a statement on responsible climate change lobbying, which will be very similar to previous statements, except with one addition, which is most of the previous statements and evaluations of companies have actually not been explicit about the goal that they're seeking. So I think the thing we would be doing this statement is making it very clear that we are concerned about alignment with the goals of the Paris Agreement, and that it covers all aspects of the company's activities. We're going to develop a framework, which will be principles and indicators that can be applied to corporate lobbying. I mean, they will build heavily on the work of Influence Map, which is working very closely with us on this project. And then we will develop indicators which can be added to TPI and to the CA100 plus benchmark. Obviously, as Claire mentioned, the CA100 plus benchmark has a number of indicators at the moment. They refer to the company's own lobbying and to the lobbying practices of its agents. But CA100 plus has also signaled that it will review and evolve those indicators as kind of understanding and expectations evolve. Next slide, please. We consulted in the middle of 2020 on the principles and ideas that should underpin this work. We are going to be formally consulting on the indicators and the expectations in, I've said Q1 2021, but we expect late January or early February. Next slide, please. These were the topics we covered in the consultation. So it's kind of what we talking about, what's the scope, guiding principles, and the role of stakeholders. In my next few slides, I'm just going to highlight some of the interesting themes, and then we can discuss them in more detail in the Q&A. So next slide, please. So perhaps the most striking finding from the consultation was the difference in views between companies and the rest of the stakeholders about trade associations. So every other stakeholder group, investors, civil society organizations, policymakers, said that trade associations are critical and critical influences in the climate change debate. I mean, they're seen as representing a body of knowledge, they're seen as representing a consolidated view of industry, or as representing industry's views, and policymakers listen carefully to them. It was interesting that companies disagreed quite strongly with that and suggested that actually trade associations were relatively unimportant and were relatively uninfluential in the climate change space. So a view that is clearly at odds with what every other stakeholder is perceiving. And I think raises quite important questions around governance. So if that's companies' perception, will they in turn pay less attention to to trade associations, oversight of trade associations? And one of the reflections I would offer on the material Clare presented is it's striking how few companies had actually conducted formal reviews of their trade associations and lobbying on climate change. I mean, the number, I think it was approximately 10 or 12 who've now done so, which has been catalyzed by investors. But what we should really be shocked about is how few had, or even now have, done that kind of review. Next slide, please. This was the definition of lobbying that we proposed in the consultation. We received very strong support for it. I think it mirrors the issues raised by Dylan in his presentation, which is that lobbying is now much more sophisticated. It's well, maybe in the US, but it's relatively rare to find companies who are completely and adamantly opposed to climate change policy, or who cling to the kind of rhetoric that climate change is not scientifically proven. It is much more sophisticated. So what we have is companies saying that they support the goals of the Paris Agreement, but then in practice acting in ways or looking to undermine or delay lobbying, or highlighting the economic costs, or challenging some of the premises on which legislation has been developed. So a set of expectations that is relevant to that landscape needs to deal with that sort of, I guess, the subtlety of arguments that we're now seeing. It also needs to deal with the reality that companies lobby in not just one-to-one or direct with policymakers, but in the public sphere, on social media, etc. So there was strong support from, I think, all the respondents to the consultation that a modern approach to lobbying from investors needs to capture both of these elements. Next slide, please. The next slide is what I affectionately refer to as my what do we do and what should we be doing. So if you look at the left-hand side, I mean, many of us have been involved in responding to consultations. Many of us have been involved in public protests, street marches, etc., around climate change. Yet the respondents to the consultation were clear that actually that's not the game. As investors, it is these things on the right. It's the role of, it's what do trade associations do? What do sort of think tanks and similar bodies do? That is really important in influencing public policy. So that's not to downplay the importance of the items on the left, but actually as investors, we need to focus our attention on those areas where A, we have influence, and B, which are most important. Next slide, please. And this was a somewhat speculative question, because we just wanted to see what people thought, but there was a very, very strong support for the idea that stakeholders should be involved in corporate decision making on climate change lobbying. This is, I suppose, traditionally, the model is that companies do something and then tell investors about it a year or two later. So it's kind of an act now and apologize later strategy. It's very clear that that's not satisfactory, and that stakeholders would like much greater involvement in corporate decision making in terms of corporate policies, and in responding to specific consultations. I mean, of course, the dynamics are difficult given the kind of timeframes within which consultations are run and timeframes of which policies develop. But there's a very clear signal around our companies opening up their processes to stakeholder engagement, and we are going to include some indicators on that in the framework that we developed. And then my last slide, please. So just where you get further information and responding to consultation, we will confirm the dates that's being launched early in the new year. Charlotta, I'm going to hand back to you. Thank you.
Thank you, Rory. That was a really good overview of what is happening within that area. I have one question. Could you repeat just what the hands-on deliverables will be from this project for companies? How will this project be helpful for companies and for investors as well? Thank you.
Okay, so let me deal with investors first. So the project will first provide a new investor expectations, which will allow investors around the world to speak with a common voice, because I think we need to be aligned, and the inconsistencies between the expectations at the moment are unhelpful. Companies say, oh, but you say this here and that there. So that's contribution one. The second is that it will provide measures that will get built into CA100 Plus and the Transition Pathway Initiative. So investors will be able to not just say these are the issues we care about, but to signal and to measure companies on those through those frameworks. And third is the more detailed indicators will feed into the work that Influence Map does. So it'll help it ensure that its work, which is very good, of course, but that it remains relevant to the work and to the landscape we're working on. So that's the investor perspective. For companies, I think it will provide consistency. So consistency of message from investors, and it will also provide more detailed indicators which will effectively act as a roadmap for companies and how they should be managing this part of their business. And I mean, I suppose to summarize, I mean, this is fundamentally about governance. Investors care about climate change and they expect companies to respond. Companies claim to be concerned about climate change and need to act in that way. But we're in a world where trust is at a premium, and we therefore need to be able to confirm and verify that companies and their trade associations are doing what they say they're doing.
Right, thank you, Rory. I will open up to questions, and again, I encourage everyone to ask questions to any of the speakers. And while you figure out what you are going to ask, I have a question for Dylan. Eva mentioned the Swedish context, and we have a lot of Swedish investors listening in here. So it would be really interesting to hear from you. If you have, lobbying is a very local issue. It takes different forms, the relationship between companies and trade associations and governments on different markets. And I think it would be interesting for all of us hearing from you if you have seen anything like that, a specific Swedish context. Lobbying.
Do you mean lobbying from Swedish companies?
Or how Swedish companies sort of score in your rating, and if you have seen anything that seems to be typical Swedish, to refer to Eva again.
Yeah, no, so I will mention we have seen, I mean, obviously there are some very important Swedish global companies, and I think Sweden as a country has an outsized influence on global commerce from both investor viewpoints and the corporate viewpoints. We as I mentioned, we do score companies that are climate policy leaders, and that means they are going outside of their traditional regulatory priorities and advocating for policies which may not directly impact them. And we've seen that from H&M, We've seen that from IKEA. IKEA is not an investor company, but it's still we still score it for the purposes of our system. On the more maybe negative side, there's a few Swedish companies, Volvo Group in particular, we see as problematic due to some of their links with very regressive North American industry groups like the National Association of Manufacturers. And so, I mean, I believe they are in the CA 100 universe, so that there's some work to be done there. So yeah, we do, Swedish companies are an important part of our scoring universe, and I think that they can be a force for positive change, maybe more quickly than some of the other large global multinationals, because of the progressive nature of Swedish investors and also the corporate forces of the positive companies around them.
Okay, great. We have a question from the audience here. Looking beyond the Climate Action 100 plus companies, which sectors should be prioritized for climate lobbying discussions? Does any of you want to answer that? Claire, do you have any views on what sectors should be prioritized after the Climate Action ones have been dealt with?
Well, I mean, the climate action ones are obviously the highest carbon emitting companies. I think to refer back to the work that Rory has been talking about pivoting this to more of a responsible lobbying footing, like I think any company, any and all company that you're talking to about climate issues, integrating within that conversation a question about how they're addressing this through their lobbying activities is definitely something that merits attention. And I would say integrating, use that word very deliberately, because I think lobbying can often be added on at the end of engagement conversations almost as an optional extra, when actually lobbying is central to everything that we need to be doing here. So I think it's not just about trying to stamp out negative lobbying or encourage companies away from that, but also about supporting them to be speaking up. We've seen it, say, with the COVID-19 responses, where you've got companies collectively putting their voice to civil society calls for, say, a green recovery or a just recovery, and these kind of calls. And actually, I think those are really interesting steps that should be encouraged. But again, it's how they translate into actions rather than sort of a surface level veneer.
Maybe if I could just follow on Claire's comments, I think there are two groups of companies that we could usefully look at. So returning to the point I made about alignment, I mean, I think climate policy is about having different voices. So challenging the idea that there's one trade association that represents everybody. So I think one challenge to all companies, irrespective of their climate footprint, is to engage in positive coalitions, or coalitions that lobby positively for action on climate change. So this is not just about delaying action, but it's about encouraging action. The second is that what strikes me from the literature on trade associations is that, okay, there are some trade associations where it is unsurprising they lobby in a particular way, so those that represent the oil and gas industry and the mining industry. I mean, of course, they're going to have a particular view on climate change and will lobby in a particular way. And, that's kind of their job in some ways. But what I find striking is that there are a whole load of trade associations who represent, I don't know, the services sector or retailer, who take strong positions on climate change, often unhelpful positions, with no sort of rationale, no particular expertise for taking those positions, and apparently no sort of mandate to do so from their members. So one of the interesting insights from the work that that has been done on trade association memberships has been not only are companies involved in sort of trade associations that lobby for their interests, but they're also involved in a whole load of bodies who actually shouldn't really be involved in climate change at all. So you see chambers of commerce and those kind of bodies, and I don't know, there's a bunch of retail associations in Australia, which I spent couple of years looking at, who are just taking these random positions anti-climate change, but it's not relevant to their purpose, nor do they have any real reason to do so. So I think there's a bit of a cleaning out of the stable. So we understand which trade associations are rightly involved in this debate, and which ones should just be either keeping quiet or actually we should be asking them to be much more constructive and positive in the policy space.
Thank you. I had a discussion with the trade association recently who was concerned that we were talking a lot about negative lobbying, and they were concerned that everything that they do, if they have opinions on a climate policy that is not well designed, that would be perceived as negative lobbying, and that it's really a grayscale here where industry associations and their member companies really must be able to have a voice and voice their concerns about certain regulations that are not well designed. What would you say to a trade association like that? What should I have said to them?
What did you say, Charlotte?
Yeah.
Well, I said that's why we need the framework and the academic approach and really sort this out.
Yeah.
Can I just, the kind of the ask of the US investors is, if you cannot advocate positively, then don't advocate on climate. So this refers to what Rory's saying about these chambers of commerce and others who are driven by a narrow group of fossil companies, and they take positions and they say we're representing the entire group. And it's not true. We've statistically proved it's not true in Europe, Japan, and the US. So if you can't be positive, just ignore the issue, because it's too important just to treat it as another regulatory issue that you just kind of use the trade association mechanism and their kind of the club way they operate on. So that's one thing that would get rid of a lot of the opposition from these powerful cross-sector groups, and that would be a huge step. Another step to be positive, but let's get rid of the negative lobbying from the cross-sector groups.
Rory, did you have a quick?
Just reflecting on the project we're doing. I mean, we also see lobbying as a legitimate activity for companies. You know, it is important and necessary that companies can express their views in the policy arena. So I think when this gets encountered, I think we challenge companies to be clear about what are the consequences of their lobbying. So if you lobby as a technical argument against something, what's that going to do to the regulation? What is it going to do to progress on the issue? Or is there an alternative way that's better? So it's I think there's a framing thing and a challenge thing. And I think what's happened has been companies have been allowed to oppose without being held to account for the opposition. Not that the opposition is wrong, because often the views are sensible and helpful, but without that accountability mechanism, it's kind of free rein for companies on technical details, which then delays or has the effect of delaying or obstructing progress.
Thank you, Rory. We're actually running out of time, but if you don't mind, I would like to pose the last question here from the audience. What about the trade associations in the financial sector? How do they perform in general regarding climate change? Could someone comment really briefly on that?
Dylan?
We studied them, and they're not really active on the real economy regulations like emissions trading, but they are increasingly getting involved in sustainable finance, climate finance policy. And I have to say, it's not very positive. So there's a big role for the financial sector to make sure their own industry associations are helping the EU sustainable finance policy stream, because this is one thing that's really important for the EU's Green Deal and the climate agenda. And there will be ones emerging in the US as well. And we know the financial sector is the biggest lobbyist in the world, according to our data. It spends the most. And so, you know, this is really important that when it comes to the financial tinted regulations on climate, it's behind it.
Well, that's some food for thought for us and this audience. Thank you, Dylan. I'm afraid we've run out of time. I think we could have continued this discussion. I want to thank all the speakers for being here. And if anyone is really interested in this topic, there's actually another seminar coming up the 20th of January with Fiona Reynolds, who is CEO of PRI, Per Bolund, who is the Minister of Financial Markets in Sweden, the business organization Svenskt Näringsliv, and Scania, the industrial Swedish company. And you will get an invitation to this seminar shortly. So that's if you want to continue the discussion. So thank you all again. Have a really nice and relaxing holiday season, everyone. Thank you for attending.